Hello students, my name is Khamis Bilal. I am exclusively teaching IB online. I am going to start the first class of the UK Tax 23-24. You need to be very careful whenever you are going to select your tax paper that's code is TX. You need to select UK TX. The code is UK because whenever you are going to opt the paper of tax, you will see many version of tax. Let's suppose USA tax, Pakistani tax, Indian tax, Hong Kong tax, or international tax. So be careful when you opt the TX, the code has to be UK tax, right? Now I'm going to start with basic things such as few jargons which will be used in future chapters. So before starting the chapters, we need to understand few jargons which are very important to understand UK tax. Here we go. Let's start with the basics. See, UK tax. We are going to start the UK tax of 23-24. You need to be very careful that this is your tax year. This is your tax year. For example, before this attempt, we were using the tax year of 22-23. You need to be very careful whenever you buy any kit, any book, or any study material. You need to check that this study material belongs to the tax year 23-24 because in 22/23 there were different rules. In 23-24 we are having a different rules. So be careful. Just check the tax year in order to pass the exam. Otherwise, the rules will be different of every different tax year. Your tax year, you can say that tax year, or you can say that fiscal year. But I'll mostly use the common term that is called tax year. Your tax year starts from 6th of April 2023 and ends 5th of April 2024. So this is your tax year. You need to focus on this date. Before that date, what had happened, it's none of your business. After that date, what will be happening, it's none of your business. You need to be focused on this date. That date is 6th April 2023 and ends with 5th April 2024. That's your tax year. That's your tax year. And how the short form comes? 23/24. So whenever someone asks you what is your tax year, you just need to say that 23 and 24 is my tax year. Got it? That is your tax year. Fine. Now, one more thing. The term Finance Act. What do you mean by Finance Act? Finance Act is a rule book which is introduced by the tax authority. In that rule book, you will learn lots of tax rules such as how to calculate the tax, how to calculate the taxable income, how to calculate the pay, and how to calculate the capital gain. In short, in this book, you will learn lots of rules regarding tax, such as how to collect a tax, how to pay a tax, what are the deadlines to pay the tax, what are the fines and penalties if you don't pay the tax. So this rule book belongs to Finance Act 2023. Previously, in previous attempt, we used Finance Act 2022. So be careful. You need to check your tax year. Your tax year is 23/24. Your Finance Act is 2023. You cannot use the previous Finance Act or tax year rule book. I hope you are getting the point which I am trying to explain you. There is one more jargon which I will be using throughout the course, that is HMRC. What do you mean by HMRC? HMRC is a tax authority which are responsible for all the tax matters. The full form of HMRC is Her Majesty Revenue Custom. But I will be using the word HMRC, and in exam you will also see the word HMRC rather than the full form. I believe that you have learned the basic things which you need to follow throughout the course outline. Let's go for some more basic things. Now, my question is that how many sources a person has to earn the income? Now, you need to tell me sources of income. Sources of income. What are the sources of income an individual has? I'm talking about the legal sources. I'm not saying what are the legal and illegal sources. Just let me know what are the sources, legal sources to earn the income. The first thing comes in my mind is that employment income. It means you are doing job somewhere and you will get the earning, right? The second thing which comes in my mind, that is self-employment income. Self-employment income means that you are doing business and from the business you are earning the profit. The third thing which comes in my mind, that is the property income. Let's suppose you have a house which is empty. You decided to let it out, and from the tenant you will get the rent, right? That's a property income. Number 4 one is interest income. What do you mean by interest income? Interest income means you have a saving, you have some extra amount, you either kept in a bank or invested somewhere. So it means on that investment or saving you will get some interest, that is called interest income. The last thing which is called dividend income. What do you mean by dividend income? Let's suppose you buy a shares from an Apple company or any other company and you get a dividend, you get a profit on shares, that is called dividend income. These are the 5 sources which normally comes in mind to earn. There are also other sources, but these are the regular sources. These sources are included in your course outline. We have few more sources, but we will learn later on that. But these are the major sources and these are the chapters. Let's suppose there is a chapter of employment income in your course outline. There is a chapter of self-employment income, the interest income, the trading income, and the dividend income, right? Got it? So it means there are 5 sources to earn the income. Now be focused over here. These all sources comes under the head of an income. Now I'm going to write the head of the income. There are 3 heads of income, that is called non-saving, saving, and the dividend. You can also write in place of dividend other, right? But there is no difference writing dividend or other income. You can write anything you want, right? So employment income will be the part of saving income, non-saving income. Employment income will be the part of non-saving income. Self-employment or trading income will be the part of non-saving income as well. Property income will be the part of non-saving. These three sources belongs to non-saving head, right? You cannot change the sequence of the head. Let's suppose you are saying that, sir, I want to write first saving income, then non-saving, then dividend. I'll not allow you to do that. This is the format. This is the format. I'll write the name of the format later on, but you need to focus that how to make the format. The interest income will be the part of saving because it comes from the saving. The dividend income will be the part of definitely for the dividend income. Alright. Now you have made the format which is just half format. After calculating this, you will get the total income. That's your total income. Got it? Now you need to less one thing, that is qualifying interest. Qualifying interest hardly comes in paper, but as I have already told you that IB Online teaches you whole course outline. It will not leave a single word for the difficult situation, right? Now, what is qualifying interest? There is a subtopic of qualifying interest I'll teach you later on, but for just giving you idea what is qualifying interest, I would like to give you an example. Let's suppose I'm doing a job in a company and my employer said to me that you need a laptop in order to perform your job. I said I don't have laptop. I need to buy it and even I don't have money to buy it. So my employer said, okay, go and get a loan from a bank on your name and pay interest on that loan and buy a laptop from that loan amount. I said, okay, because I need to do a job. I need to feed my family. I agree on it. So I pay interest on that loan. So that loan qualifies for qualifying interest. I can less from the format that interest payment, the asset which is specifically used for job purpose and it is on loan. So the interest payment has to be deducted from the format. Now you need to less one more thing, that is personal allowance. What do you mean by personal allowance? This term I will be using throughout the course outline. You need to be very focused about the personal allowance. The basic, the mostly used limit of the personal allowance is 12,570. Now, sir, can you tell me what is personal allowance? Very simple thing. Let me explain you. For example, if my total income is less than or equal to 12,570 pounds, so I will not pay any amount of tax to HMRC. It means the person who has total income less than equal to that specific amount, that is 12,570, you are not eligible to pay the tax. What if, sir, my total income is 12,571? So I would say that the extra amount after deducting the 12,570, the extra amount is £1. You need to pay tax on that £1. So it means whatever amount is excess, you will have to pay tax on it. I believe you are getting the point, right? Now be focused. What if my non-saving income is 5,000, total income is 5,000, So, and my saving income is, let me give you an example. Let me give you an example. It will help you a lot. Let's suppose it's 5,000, it's 4,000. Got it? There is no qualifying interest. So, how will I use my personal allowance? That's a question. See, I'll less 5,000 over here. From 12,570, I have used 5,000, and I'll carry forward 4,000 in the next column. The remaining personal allowance after deducting 5,000 and 4,000 will be wasted. So, in short, you can carry forward your personal allowance to the next column until it becomes zero, right? So that's the thing which I wanted to explain you guys. Just let's go back to the art track. Got it? I believe you are getting each and every point. Now you will get your taxable income. This is very important requirement. Normally examiner asks what is your taxable income, so you need to use that format. After deducting this, you will get your taxable income. After deducting this, you will get your taxable income. Taxable income means that you will have to pay tax on this income. You will have to pay tax on this income. I believe you know how to write the format. The name of the format is individual format of taxable income. That's the name of the format which you need to understand how to make it. I believe you are getting my all points. Now moving towards the next thing. These are called tax bands. You don't need to remember these bands. Basically, these will be given in your exam, but I'll make sure I'll make you that much practice that you remember these bands, right? So the first band starts from first 37,700. Then the second band starts from 37,700 till 125,140. The last band starts from 125,140 and so on. Got it? Now be focused over here. Any person whose taxable income is less than or equal to 37,700. I'm saying taxable income. I'm not saying total income. We do not have concern about the total income. We always focus on taxable income. Now the thing is that I was saying that if a person has total taxable income is 37,700 or less than it, he will be called basic rate taxpayer. Basic rate taxpayer. Got it? What if, sir, the person has a total taxable income more than 37,700 but less than 1,25,140? So he will be called higher rate tax payer. Sir, what if the person has a total taxable income more than 1,25,140? Then that person will be called additional rate taxpayer. I believe you are getting all my points. There should not have any confusion regarding the status of the taxpayer. The status is very simple. If your income is less than equal to 37,700, you are a basic rate taxpayer. If your income is more than 37,700 but less than 1,25,140, you are a higher rate taxpayer. But if your total taxable income is more than 1,25,140, you will be a additional rate taxpayer. Okay, now moving towards something else, we need to check the rates. Rates of the tax band. Rates of the tax band. Now be focused. Please be focused over here. I need your 100% commitment over here. Be focused. I need your 100% focus what I am explaining you just a few minutes ago. See what is it? My first band is this, right? My second band is this, right? My third band is this, right? Now we have three heads of income: non-saving. I'm writing the short form. In exam you cannot write the short form. Saving income and the dividend income. Now see the tax rate. If you are a basic rate taxpayer, so your non-saving income will be taxed at 20%, your saving income will be taxed at 20%, and your dividend income will be taxed at 8.75%. Got it? If you are a higher rate taxpayer, so your non-saving income will be taxed at 40%, saving will be taxed at 40%, and this will be taxed at 33.75%. Got it? What if you are an additional rate taxpayer? This will be taxed at 45%. This will be taxed at 45%. Now, for additional rate taxpayer, you will need to pay 39.35%. So don't need to remember these percentages. When you do lots of practice with IV online, you will definitely cram these tax rate, right? And obviously these tax rate will be given in your exam. Few things of tax rules will be given in your exam, but I mostly recommend to my students just cram it, so in order to save that time. So now I'll with the help of examples, I'll show you how to use this band. Now we are going towards the examples. Be focused on the example. Now we are going for the first example. First example is very important, guys. Be focused on it. This is the example number 1. Let's suppose Mr. A has following income. Number 1, he has employment income. Let's suppose 25,000. He has property income. Let's suppose 15,000. Requirement: calculate total taxable income and tax liability. These are the two requirements which normally comes in exam: taxable income and tax liability. Now, first you need to decide that how many heads of income you need to make. Sir, employment income and property income comes under the same head of income. That name is non-saving. So just you will make now two things. First, you will make a total column. That's an additional one that has no concern with it. You just need to make it. I'll let you know why we are making it. Now you need to write employment income. In total column, you write every income, that is 25,000. In non, this belongs to non-saving, so I write it down in non-saving. You have property income, that's 15,000. That belongs to non-saving. Now you need to add, you will get the total income, right? Your total income is 40,000. Your total non-saving income is 40,000. You need to less one thing that I have already explained you, that is personal allowance. That amount is fixed to a certain. Now you need to less it. 40,000 minus 12570, it is 27,430. 27,430. This is your taxable income. You have completed the first requirement. Congratulations, you did very well job. Now we are going for the second requirement. Now be focused over here. As you know that, let me ask you a simple question. Your status, taxpayer status, Mr. A taxpayer status. Sir, Mr. A total taxable income is less than 37,700. So he is a basic rate taxpayer. Yes, correct. And the non-saving income, this is following under this amount. Look at this amount. This amount is following this band, under this band. And under this band, non-saving percentage is 20%. So what I do, I just need to it's 27430 multiply by 20%. That's it. It will give you 54860. That's your tax liability. I believe you understand that point. I believe you understand this point. Now, going forward towards more example in order to get the grip on it. Example number 2. Now this will be just a bit more difficult as compared to the previous one. Mr. B has following income. Number 1, employment income. Let's suppose 30,000. Trading income, the other name of trading income is self-employment income. You can use any jargon. 15,000. You will have a property income, 7,000. You have a interest income, 4,000. You have a dividend income, 3,500. Now I have added all sources of income in order to make sure that you will have a strong grip on it. Right now I'm going to just ask you how many heads of income you want to make. Your answer has to be, sir, we need to make total, we need to make non-saving, we need to make saving, and we need to make dividend. The first one is employment income. that is 30,000, that belongs to non-saving 30,000. So we have a trading income that is 15,000, that belongs to non-saving, that is 15,000. So we have a property income that is 7,000, that belongs to non-saving income. So we have a interest income that is 4,000, that belongs to saving one. So we have a dividend income that is 3,500, it belongs to dividend income. I believe you know what I am trying to do. Okay, now believe me, this is one of the easiest thing to just put down in the format, right? Now add this total income. Now I need a help of calculator. 30,000, 15,000, 7,000, 4,000, and 3,500. 59,500, 30,000, 15,000, 7,000. It's 52,000, 4,000, 3,500. Now be focused over here. Now you need to less one more thing, that is what? Personal allowance, that is fixed 12,570, to a certain extent 12,570, right? No personal allowance left. For the other columns, 59,500 minus personal allowance 46930, 52,000 less personal allowance 39,430, 4,000 and 3,500. That is your taxable income. The same requirement required same. Got it? Okay, fine. Now be focused over here. Why we make the column of total? Why we make a column of total? Because it really helps you to identify that your status of the taxpayer. Now my status of the taxpayer is higher rate taxpayer, because his total taxable income is more than 37,700 but less than 1,25,140. Am I right or wrong? Yes, you are right, sir. Okay, now be focused over here. Now I'm going to calculate the tax on that income. Be focused. I'll write rules of interest income and dividend income while calculating the tax. You need to just jot down these rules. You need to write these rules. These rules will be given you on notes, but I want you to write yourself in order to better understanding, in order to cram it. Now I'm going to apply the tax on first non-saving income, right? Non-saving income. First band will be utilized for the non-saving income, that is 37,720%. It means I have used first band. The first band has been finished, but still you have left some amount of non-saving income. You have left some amount of non-saving income which is untaxed. How much amount is left? If I less 39,430 less 37,700, so it means 17,030 will be taxed at 40%, because it is going for the higher rate band. 692. Now this specifically belongs to non-saving one, right? This specifically belongs to non-saving. It means you have taxed the non-saving one, you have completed, you have taxed all the amount of non-saving one. Now be focused over here. I'm writing the rule for you guys. Rules for interest income. The first rule for interest income is that, or saving, if You are basic rate taxpayer. First 1,000 pound will be taxed at 0%. Got it? If you are a basic rate taxpayer, so first 1,000 of saving income will be taxed at 0%. What if you are higher rate taxpayer? First 500 pound will be taxed at 0%. If you are a basic rate taxpayer, so first 1,000 will be taxed at 0%. If you are a higher rate taxpayer, so first 500 pound will be taxed at 0%. What if, sir, I am a additional rate taxpayer? There is no such relief for that kind of person. This relief is only given for basic rate taxpayer and a higher rate taxpayer. I believe you are getting my point. There is one another rule for saving income which I'll let you know later on. So now my question is that what is your status? What is Mr. B taxpayer status? Sir, he is a higher rate taxpayer, so you need to make sure from 4,000, for first 5,000 will be taxed at 0%. The remaining 3,500 will be taxed at 40% because you have already in higher rate band, that's why these sequence are the upper sequence is very important. You cannot change the sequence, right? Now be focused. You have taxed all the saving income. You can check it. This belongs to saving. Got it? This belongs to saving. Now going for the dividend. Let me write a rule for the dividend. Dividend rule is very simple one. Rule for the dividend income. The rule is very simple. First 1,000 pound will be taxed at 0%, whatever taxpayer status. What does it mean, sir? Does not matter you are a basic rate taxpayer, you are a higher rate taxpayer, you are an additional rate taxpayer. First 1,000 will be taxed at 0%, right? Now I don't need to check his status because I know first 1,000 pound will be taxed at 0%. The 2,500 pound will be taxed at, what is the tax rate? The tax rate is 33.75%. I need the help of the calculator. It's 843.75. 843.75. You need to add. It's 10475.75. It's your tax liability. For cross check, just add all the items which you have taxed. 37700 plus 1730 plus 500 plus 3,500 plus 1,000 plus 2,500. This is 46930. This has to match. This has to match with the figure of your total income. This has to match with the figure of your total income. This is a cross check. That's why I make total column for two purposes. It tells me the status of the taxpayer. Second thing, it helps me to check out that every amount I have taxed or not. So I hope you understand this example. I know in a starting you will find a bit difficult to use the band, but once you are used to of it, you won't have any problem. Ivy Online provides you lots of practice material, so Khamis Bilal as well provides you a lots of study material and a practice material in order to make sure you pass your paper with flying color. Now, the last rule of the saving income, for which I need to make an other example for you guys, just the bit trickier one, please focus on it. Let's suppose Mr. C has following income: employment income, let's suppose uh, 13,000, uh, interest income, let's suppose 8,000, dividend income, let's suppose 500. Requirement same. First decide how many heads you want to make. So first head is total. Obviously total comes, then non-saving, then saving, then dividend. So first one is employment income, that is 13,000, that belongs to non-saving 13,000. The second one is our interest income, that is 8,000, that belongs to saving one. So the last one is dividend income, that belongs to dividend, so it will come on dividend income. I believe you are getting my point. Now you need to add 13 plus 8 plus 500, 21,500, 13,000, 8,000, and 5,000, right? 500. It is your total income. Now less personal allowance, that is 12,570, 12,570. Now if I less 21,500 from personal allowance, I'll get 8,930. 13,000 minus 12,570, it's 430, it's 8,000, it's 500. This is your taxable income. Got it? Now be focus over it. Be focus over it. This is very trickier point. See, if your non-saving income is less than 5,000, what I'm saying, if your non-saving income is less than 5,000, so one more band will be open. So one more band will be open. The band starts from 1 and ends from till 5,000, and this band is only for specifically for saving income, specifically for saving income. Number one, when it opens, when your non-saving income is less than 5,000, it opens for what? It opens for saving income, right? How I will use it? Three questions. It is open, I have already given you the answer. When non-saving income is less than 5,000. For whom it is open, I have already given you the answer, that is for saving income. How it is used, I'm going to just tell you the answer of it. Be focused. First, you need to tax on your non-saving income, that is 430 multiply by 20%. Got it? 430 multiplied by 20%. It's 86. Now, other bands are the same. Got it? The same one, which we have already learned. Still from the first band we have left few amount. The amount is around, if I less 5000 less 430, it's 4570. 4570. Now I'm moving toward this. Any amount of saving income comes under this 5000 band will be taxed at 0%. So how much band is left after using the non saving? That's 4570. It interest income will come over it and it will be taxed at 0%. I hope you are getting my point. Three things need to remind it. When it's open, it opens when your non-saving income is less than 5000. For whom it is open? It is open for saving income. How it is used? After using the non-saving income, any amount left in the 5000 band, the amount comes under this for saving income will be taxed at 0%. I hope you are getting my point. Now, as you know that you are a basic rate taxpayer, so the rule is for simple. First 1000 of interest income will be taxed at 0%. Are you getting my point? Now from 8000 you have taxed once 4570 and 1000. The remaining amount is 2430. It will be taxed on 20%. So if you calculate, you can just verify yourself. If you add this, it will give you 8000. It will give you 8000. Got it? Now, the last one. As you know, the dividend income is 500 and the first 1000 will be taxed at 0%. So it's 0. Got it? So just add. You will get your tax liability. For the cross-checking purpose, 430 plus 4570 plus 1000 plus 2430 plus 500. It's 8930. It has to be equal to this. I believe you are getting my point. Now for you guys, I'm writing the last rule of saving income. 1000 till 5000 band. First question. When it is opened? Answer. Non-saving income is less than 5000 pound. For whom it is open? For saving income. The last question. How to use? Step 1. Apply tax on non-saving. Any amount left in 5000 band used by saving will be taxed at 0%. Then follow rule 1 or 2. What do you mean by rule 1 or 2? This is rule 1, this is rule 2 according to the situation. If you are a higher rate taxpayer, then first 500 will be taxed at 0%. If you are a basic rate taxpayer, then 1000 pound of interest income will be taxed at 0%. I hope you understand each and everything in this class. This class is very much important to understand what is UK tax, which text. For we will be following what are the sources of income, rules of saving income, rules of dividend income, and how to use the band, what is the format. So for the today's class, I'm signing off. Sir Khamis is signing off for the class 1, that is called Introduction to the Sources of Income. Thank you, class. See you in our next class.